today we are as low as $500 minimums to get people started with this.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Craig Cecilio. Craig, how are you doing today?
I'm doing great, Todd. How you doing?
I'm doing excellent, man. And it's glad to have you back on. The first time we couldn't quite connect. We were just having such a difficult time with the internet. You even paid extra money where you were at a hotel to try to get excellent internet, and it just didn't work. So we're here. We're ready to roll. Are you ready to rock? Because I'm ready.
I'm ready to go. Yeah. I'm not paying for
do
internet. This is actually an office, so we have the internet works. But
You
I was
have
surprised
internet.
with that as well. Yeah.
Perfect.
I was surprised.
Yeah. You know, that's just how it goes sometimes. But glad to have you on the show officially. A little bit about Craig. He's the CEO and founder of DiversyFund. And Craig's mission is to break down the barriers that keep most Americans from investing like the privileged, the well-connected, the wealthiest 1% of our country. And I love that mission because, man, I feel the same way. You've got these haves, you know, the people that I came, and I'm sure a lot of listeners and Craig, we can dig into your background, but, you know, so many people come from these backgrounds of not having a lot of wealth, and you just don't have an opportunity. You don't even see some of these opportunities to invest in alternative assets. It's stocks, bonds, mutual funds. That's it. That's the only thing you're going to invest in, what some financial planner tells you, and not many amazing investments are out there. So anyways, DiversyFund was founded in 2016 with that mission in mind. And it's a wealth tech platform. You could provide the power of crowdfunding with technology. So, man, there's so much more to DiversyFund. There's so much more to you. So let's dive in, Craig. Tell our listeners a bit more about your background and maybe what's the why? What's that reason why you actually care about giving other people an opportunity to maybe invest like the wealthy?
It's almost like my journey has been full circle. It's growing up in a working class family. I had the benefit of my parents working really hard and sending me to private school. It was a wealthy area. It was in Fairfield County, Connecticut, if you're familiar with that part of the country. The high school looked like what you see on television with the private schools. Was just like that, identical to that. If you ever watch any kind of shows on television, seeing private schools, I think Connecticut's the private school, high school state. And so kind of looking around and seeing all those wealthy people and all this opportunity they had, they're always, this person went to the country club, this person's dad did this person's mom did that. My parents were more working class. My mom was a school teacher. My dad was in retail, but I was too young to understand that at that time period. But when I got older, I had the fortunate circumstance to meet some people to teach me about what I'm in today, syndication, then it started kind of dawning on me, this is how they do it. These are some of these hidden secrets of the wealthy. And then when I saw the advent of the Jobs Act, I had this kind of aha moment. I'm like, okay, this is what I'm supposed to do. So how do I introduce this to everybody else? And today we are as low as $500 minimums to get people started with this. And as you said earlier, is the biggest thing that we're coming across is awareness. We have to educate people about that this exists. And most of the general public does not know it exists. We are fortunate enough to have a ton of users on our platform. We have about 500,000 users. 30,000 people have actually invested money. We went out and did a customer interviews with about 1,000 of our customers, and we really asked them a lot of questions. And we were shocked in how little knowledge they had of this one asset class, which we found pretty simple, which is just kind of value add apartments, value add real estate, multifamily real estate. And we were shocked. People with even degrees, CFAs, that CAIA designation still didn't understand about this asset class. And I was like, wow. And so kind of I feel like we're on a mission here to kind of lower the barriers to entry as well as educate. And I think education is kind of where we're leaning more towards right now. but it was shocking.
Yeah. So it's so interesting. So are these offerings that are on your website, are these your offerings? Are they, do you have other people's offerings? Are they all multifamily real estate? Explain DiversyFund.
Yeah. So our predominant two funds have multifamily value add real estate. We are the sponsor in it. It means we're the general partner in these transactions. We own the assets themselves. As we grow, we sometimes do limited partners in some deals, but the majority of them is we're the sponsor. We're running the real estate.
Gotcha. Awesome. So $500 investment, if somebody's investing, because most of these syndications are a 50,000 or 100,000 or larger amounts. So $500,000 investment. Tell me, what are some of the, what's the reason behind such a small investment? And then what are maybe some pitfalls? And also, let's just start there. What's the reason behind the $500 investment?
It gives the opportunity to an everyday investor who might not be up that food chain per se to get involved, to get started, to learn, to educate themselves, to start learning about how to save in money and put it in an area where it can grow over time. So that's where the $500 came from. In the future, might lower that a little bit more, because we do have people who set it up where it comes out monthly out of their checking account or after you get paid, so they can build wealth over time. It's been a great tool. We have a great tool on our platform right now for that. So that's kind of where it came from. This is to get people involved sooner rather than later.
And Craig, do these investors have to be accredited, or can they be non-accredited?
It's non-accredited, so that means there really is no prereqs on this at the end of the day. Granted, you want to do 10% of your net worth. So if your net worth is $5,000, which most people are, $500 should be in your investment size.
Yeah.
It really decreases that barrier to entry.
And so $500 investment. It takes, if you're trying to raise $5 million, it takes a lot of investors to do that. I got to imagine that's one of the pitfalls. What are some of the negatives to going with small? And then we'll talk about some of the positives.
The negatives, I would say, with the legacy institutions and all the layers of fees involved, we have to do AML checks, KYC checks. We have to push funds from banks and drill that down. The regulators coming in and saying, hey, you need this person to check out this and check out that, and there's a cost to that. So that's what we deal with. The new technologies out there are great. Blockchain is great, but for some reason, it's still not accepted through the compliance and regulatory agencies quite yet. So the technology exists out there to lower those barriers, lower those costs. However, it's still kind of in play and flux with the regulatory agencies. So I would say that is the cost of the transaction itself is high. And then we are at a good point. So we have 30,000 today. So we had kind of build this out from day one with zero to get to where we are today. So there was a lot of cost involved to create this platform. And I don't know if I would do it again, knowing what I know today, but we did it. And there's not a lot of people who've created something like this, because you really learn a lot in the process of building it out. And there's a lot of cost and time spent of learning and kind of grinding out every obstacle that's thrown at you. And so now we're at a level where we're getting more cost effective. We know what we have to do. And we have thousands of investments happening on a monthly basis.
Interesting. And these are kind of open funds. Is that correct?
Currently, they're closed funds. They're 5-year funds.
They're 5-year funds.
Yes.
So biggest benefits to doing it?
You get to help people out, to get people involved. The biggest benefit, that's the passion behind this, is I could get people who would never have a chance to do that to get involved into it. So that is, at the end of the day, that's what puts a smile on my face. It's not about making money it's building something that could help people. That's what I say. It's just, I just feel lucky and fortunate to have that opportunity. And at the same time, I know how to take that and make money with it.
Yeah, right. Which is great. So my audience is pretty familiar with syndications, with multifamily, with other, real estate syndications. You typically see a 506B or a 506C. And how are you doing it to where you're able to take a non-accredited investor into your deal? Is it more of a REIT, or what kind of product are you offering?
Yeah, the structures that we started out with was a Reg A plus offering, came out of the Jobs Act. It's for non-accredited investors. As you progress up, there's different kind of investment vehicles you can as you go up the food chain and you increase your assets under management. We've done 2 of them so far. They both have $75 million limits on those type of offerings. There is a little bit of expense involved to start those up. They're quite expensive and a lot of compliance to go through. So that's kind of the barrier to entry. If you're starting this out, it's kind of high. It's a high dollar cost to get it going and then build out your technology with it. But those are the exemptions that we're using today for the funds.
Nice. Yeah, the Reg A, that's going to be a fairly expensive offering and time consuming, like you said, to put together, right? I mean, it's not as easy as like a 506B exemption.
Yeah. B and C, they're almost instantaneous to go live. With this, you actually have to get approval from the SEC before you can offer it or sell the securities themselves.
Interesting.
So there's a little back and forth there.
Have you thought about opening up so is this like, have you thought about opening up to other companies to be able to come in and kind of piggyback off of what you've already done, and maybe even different asset classes and stuff like that?
We have a lot of ideas down the pipe as we're growing to do things like that. I would say we're open to everything. And I believe that's a natural evolution of a company. Is when you grow to a certain level, you start taking in different products, you start deploying your capital different ways, especially if there's a market change coming, you're probably chasing yield more than anything else. And on the horizon right here, we have a lot of uncertainty that's going on in today's world right now. Today, as we're talking, there's a ton of uncertainty going on. But I feel like we've been uncertainty for the last 3 or 4 years. There's always been something kind of. I feel like
it's been the last like 15, 20 years. It doesn't go away. It's just different layers of uncertainty, right?
Yeah. We just came out of a pandemic and now we're in maybe another world war. Jeez, what's going on? Yeah. It's just crazy. Yeah. And then the administration too. You have a new administration in there, and this administration is doing some things behind the scenes. I just got an article yesterday that the SEC is considering raising the threshold for accredited investors.
Yeah.
They're proposing a $10 million limit of your net worth. What is that? That's 10 times what it was.
Well, and it'll make that could be a great thing for what you're doing if you've got these offerings that allows for non-accredited investors. Now all of a sudden you've got this massive amount of people that used to be accredited that are no longer considered accredited. Where do they go? Well, you've already got a product that's pretty easily set up for them.
I didn't do this for that reason. I just read this yesterday, but that's kind of when I was having a conversation this morning about that. I was like, okay, that could be a positive. Yeah. But I was just kind of going, it's nice to do a Reg D offering and get a couple people that you might have $250,000 to do something real fast. But there is definitely an advantage of having those instruments there and taking those away. There will be a trickle down effect, definitely in real estate too, because a lot of real estate is done with 5 to 10 people on these deals, syndicating some of these deals. Now you take that away. I don't know what effect that's going to have on it. It's going to have some type of effect on the industry. Yeah. First, we got to see if it gets passed, but they're just kind of, I can't keep up with it. It's just like what's coming down the pipe there.
That's great. So I would encourage our listeners, like check out DiversyFund, whether you're interested in investing with the team, or you're just wanting to learn more about kind of what they've done, what they set up. Go to DiversyFund.com. It's a cool website.
Hey, the North Star Real Estate Conference is back. It's May 2nd and 3rd, and this year it's a bit different. We're going to be hammering in on multifamily real estate, and we're going to show you asset management, value add strategies, raising millions of dollars through syndication, and how to find those hidden gems in today's market that are just so tough to find. And one of the biggest things I'm excited to bring you is industry experts that you're going to be able to put on your team so you can hit the ground running day one. So join us May 2nd and 3rd at the North Star Real Estate Conference. I look forward to seeing you there.
Let's dig in now to your business, or more of your business, into the actual real estate aspect. And we're already on the economy, so let's stay there a little bit. Are you guys aggressively pursuing, or are you pursuing? I take the word aggressive out, but are you pursuing new opportunities right now? Are you kind of a wait and see, or are you maybe selling right now? What's your philosophy?
There's the next one, D, all the above. So we're doing all the above. You gave 3 choices. So byproduct of the market, we're getting great IRRs. To our LPs, we're getting close to 30%. As we talked this morning, we put something on the market and we went, we had our final LOIs came in this morning. We were above what we thought we could get. And we thought we could get pretty high, and we're higher than that number. So we are selling a couple assets. We're in contract with a couple assets that we've been in contract for a year, so they didn't really have the appreciation. They've already appreciated since we've been under contract to do that.
Contract to buy for a year?
Yeah, we're in some of these we've been in contract for a year. Yes.
Wow.
Some of them are due to various reasons I can't get into, but where some of these things have to deal with the escrows have to do with I'd say some government agencies are very slow transacting for us to close. So
sure.
There's nothing you can do about the fast track that closing. And we've got more coming down the pipe as well. We have a full pipeline proactively going out looking at that. So we're sitting pretty well with selling some, buying some, and looking on the horizon for what's coming in 2023, even though
nice.
2022 just started.
Well, 2022 and beyond, right? So, and are you guys in particular markets, or you're spread out kind of all around the country?
Yeah, I mean, we're in the Carolinas, North Carolina, South Carolina, Florida, Texas, Utah. I would say that's where we like to buy, and that's where we're getting a lot of stuff in our pipeline. Everything else a little outside the box. Granted, I live in California. We don't really have anything out here. And the East Coast and Southeast seem to be the hot markets for us.
Nice. Craig, let's keep diving into to your business and how you've been able to be successful. You've mentioned excellent returns to your investors. Obviously, the market's behaved very well, but it's not just by mistake that you've done well. So, what are a couple, maybe 3 really keys to your success, to how you've been able to grow your business successfully, how you've been able to provide excellent returns to your investors? What are 3 keys to that success?
Gosh, 3 keys to that. So let's go way, way back. I mean, just my thirst for just kind of getting better and knowledge and just applying that, and just kind of have on a day-to-day basis, being relentless in that pursuit of just kind of constantly learning. So I mean, that's everything across the board, whether it's just investor relations, the real estate itself, because constantly just kind of just learning again and again and again. I think that is a big part of it. 2, I would say, is just being able to be very transparent and communicative with people across the board. And that's with my investors, my stakeholders, my employees across the board. I believe being very transparent and very communicative really helps out in so many manners, because I've survived different market conditions, and to get through those, you need to be transparent. You need to have high communications. And lastly, it's just having, everyone calls it a word. It's just having that mentality that no matter what I face, I have that confidence in myself, I can overcome it. So you could call that what you want, but it's really just knowing that, hey, at the end of the day, I know what I'm going through. I have the ability to overcome it. I will overcome it, and have the confidence in myself that I will come to a solution. And no matter what's thrown at me, I take that with a grain of salt and understand that, hey, I could solve it. I could take care of it, and it's going to happen. And having that kind of confidence in myself.
Yeah. Yeah. That's huge. Be just being, I think it's very much ignored, maybe not ignored, right? People talk about it, but just having that confidence is so valuable. Being able to build the confidence. Is there anything you do in particular to build your confidence? Because we all have times where we're not confident, right? Is there anything you do in particular to build your confidence, or you just repetition, or what is it?
10,000 hours.
Yeah.
It's like constantly doing it
Yeah.
again and again and again. And I think I would recommend when you're starting out, building that up, do things that you enjoy at
Mm.
first. Because if you do those things, you're kind of getting that dopamine high of that win yourself. You need those wins
Yeah. I think
on a
and
daily
being good at
basis.
too, right?
Yeah.
If you enjoy it and you're good at it, you're going to gain your confidence. If you're always trying to do something you're not good at or you really don't enjoy, that's probably going to zap your confidence, right? If you just hate doing it and you're really bad at it, it's not going to make you more confident.
Yeah. And there's also something that I heard, I'm not sure where it came from, but get in the habit of doing the most difficult task first.
Hmm.
And so whether that be, for me, I always go whether it's compliance or investor relations, talking to a tough employee conversation. And even today, I kind of something once reached out to probably one of my employees I probably have the least amount of communication with. And I was like, okay, I'm going to start with this one first before I talk to anybody else. And I did that first thing in the morning. So got that out of the way. And now look, I'm all happy and stuff because it's all the hardest thing was taken care of. Or talk to someone about some other stuff that's difficult to do. And there's something about that's like, man, if that's just the hardest thing in the day, and you take care of it, the rest of the day is smooth sailing.
Yeah, you're
So
kind of
it's kind of a
freeing
mental thing.
yourself of that burden, right? And it
Yeah.
allows you to then focus on really what you want to focus on and what you enjoy. So that's cool. Um, what's a mistake that you or your company, what's a mistake that you guys have made, and how can our listeners learn from it?
Shiny lures. So
Hmm.
the shiny investments where there's difference between growth and spec. So
Yeah,
you watch out for the spec stuff. There's a lot of spec stuff out there. There's sexy stuff out there, and it's all architectural renderings are great. I'm gonna make this thing like perfectly green. You're gonna go up and do all that stuff. You get all excited. There might be we've done stuff with like celebrities are involved, and you kind of just treat it, bring the emotion down, treat it like an investment, use rational logic thought,
yeah,
use your underwriting, and just kind of watch out for that because that's the one thing that's thrown at you so much. Especially when I was younger, it was thrown at me all the time. Luckily, I was trained well to look and underwrite the correct way, but it constantly gets thrown at you. And it might not be your mistake; it could be the people around you bringing you something. And so you just gotta kind of take a step back and go, okay, I know this celebrity or this athlete or somebody is involved or this person's involved, but you got to kind of look at this from a rational point of view. Do the numbers make sense?
is there a particular story that you're able to tell us on when a shiny object maybe appeared to you and you grabbed a hold of it, and ran with it?
That there's one I didn't do. I remember I could say somewhat was a property out in Beverly Hills years ago, and I think it had to do with the some giant trust of you could say was it Herbalife? Herbalife, it's very
Sure.
big, and we're all involved in this transaction, and everybody wanted to do it. It was a giant piece of land in Beverly Hills, um, and you just got enamored with like this lot, this family, and dealing with it. It did come to fruition. We had all the players put together. We had the money. We're going to construct some homes there, and it was just something that just couldn't figure a couple things out at the end of the day. So we walked away from that transaction. So that was something that I got pulled into because I think the shiny lure, the lure of the LA market, which I don't go to. I'm all apartments, all commercial nowadays.
Yep.
No more spec stuff.
Yeah. So, I mean, luckily it fell apart and didn't continue on, and potentially could have been a big headache. It's funny. I don't know if I've ever really told this story, but, when you talk about shiny objects, there was a property that the oil boom, uh, in North Dakota. Things were going
Oh yeah.
crazy, expensive. They had a ton of need for housing, and a shiny object got to me. Somebody brought me a development opportunity. It looked amazing. We were going to build this hotel that was going to have, all these, oil workers were going to be staying in there, paying us massive money. We were going to be able to pay it off in about 3 to 5 years. And then it was great, right? It was going to work out super amazing. It was a small town, but it was just booming. So we got going. I put some earnest money in there. And as I was just kind of going through, what actually was the trigger is I decided that the partners were not for me. I'd found out some stuff about a couple of the partners I didn't really like, and I decided these guys aren't for me. I also had this inkling that the pricing of oil was a little bit high, and I felt like it might not stay that high. I told these guys I'm out, and within just a few months, maybe 4 or 5 months, the market completely crashed. I was so lucky that, again, but it was that shiny object that got me in there. I had no business of doing it. I shouldn't. There's no reason I should have tried to partner on that deal. But luckily, I got out. I think God was looking over me, going, "This is not a deal for you."
I remember that. I remember that time period. People were telling me about that.
Yeah.
Was that
Yeah.
2011?
Somewhere right around there. Yeah, I can't remember
there,
exactly. But yeah, that era. So definitely. Let's dive into a couple of last questions, and we'll wrap up here. What's a good book that you can recommend to our listeners?
A good book.
One of your favorites.
Everything. Yeah, that's where the shiny lure comes in. I see something and I just buy it.
Yep.
Crazy. So I mean, good books for me. I kind of go back. I like history. So I do stuff like that. I like to read a lot of philosophy, a lot of history. I got a traditional Napoleon Hill book, The Law of Success. I have one of the older versions of that. I really enjoy that book. That stands the test of time for all the books I read. I'm a big Robert Greene fan. I'm not sure if you know Robert Greene with 48 Laws of Power, Laws of Human Nature. I really like the Laws of Human Nature. It talks about people and how the psychology behind people and how they think. And he brings up a lot of examples across history. Goes way back a couple thousand years with stuff. So I really enjoy that book as well. So those are my top two, I would say.
Awesome. How do you like to give back?
Well, I used to be on the board of a nonprofit organization. I sat on the board of an arts organization for 4 years. That was very fruitful and was great. One of our art students, actually, some short film documentary filmmakers made a documentary on it and won an Academy Award. It was crazy. So one of our art students got an Academy Award for a film being based on her life story. That was so rewarding to see this person come who's from her background. She had to talk her mother jumping off the Coronado Bridge. She was going to jump off the bridge with her and her younger brother. She was able to pull them aside, and our founder of our nonprofit took her in, and the nonprofit had to deal with using art as a means of therapy. Took her in, and she started painting and doing that stuff, and lo and behold, the documentary got released, and here we go. And then her art started selling all these galleries throughout the U.S. So it's an amazing story, and she was able to pay for her family and everything. So that was really heartfelt, and that was something that I'm very proud to be part of.
Yeah,
that's great.
That's really cool. That's great. I want to go back to DiversyFund. You're taking $500 investment. You've got $30,000 investors. I've got 300 investors. How do you keep track of 30,000 investors? How do you got to provide them K1s at the end of the year. You've got to communicate with them. How do you keep track of them, and how do you communicate with those 30,000 investors?
Great questions. Technology, applying technology, different softwares, customize our technology, then building that staff and teams behind that. So we have the process down. It's pretty much automated, and we're always improving that and optimizing that. The technology's come a far way to do things. There's a lot of tie-ins with other third-party providers. Of course, it's not just simple process, and we built that over the years, and we continue to develop that out with time to make that better. So that's where you're really applying the technology to different softwares out there and building your teams around that. And yeah, it's been so we have a pretty good system in place right now. I'm pretty pleased with it, and it gets better. We do a lot of customer surveys. We try to take our customers' feedback so we could build out our product a little bit better, build out the portal. We have an app on Android and on iOS right now. This way people could easily access stuff. They could ask questions through that. We send them a lot of updates as well. So we're constantly testing and building that. It's a very repetitive process. It's going to stay on in perpetuity. We're never going to stop that. And that's just constantly asking the customer questions and constantly improving our technology and our platform.
I got a question. I'm an investor. I got a question. I want to reach out to somebody. You got 30,000 of me that want to all ask you a question. How do I ask you a question? I get how you can communicate, something to me, but how can I ask a question and get somebody if I got 30,000 investors? Same thing.
Usually, we're proactively sending updates. We're proactively updating things on our portal. We're up doing push notifications. We're sending emails, updating our portal, updating our app. At the same time, we do have customer service and we have chat bots going. There's a pattern. There's usually a lot of the same questions. So we update things and improve those things. So those questions are readily available. So we're proactive with that. So if we know there's 10 of the same question, we're going to put that on our site somewhere so people could read it proactively or send out via an email or create an ebook for that stuff. So it's a process. It's a very repetitive process. It's just kind of, you got to build it up. And once you kind of build it up, you just continue to do it and always continue to do it and continue to improve that. So yeah, we have customer inquiries on a daily basis and we're constantly responding to them. We have metrics in place to see how we're doing with our employees, how quickly they're responding to people, how the customer service is, how the support is. So we're monitoring everything across the board and always improving it. That's kind of the technology part of the business. And we're fortunate to be around after 5 years and have that built out and keep continuing to develop to make it better with time.
Yeah. Are you hiring? Do you hire VAs to do a lot of that stuff, or is it staff on site?
Well, we're 100% remote right now. So, but it is staffed by our employees. We have employees spread out the U.S. globally, actually nowadays. So okay. Yeah, they're not VAs. These are more full-time employees.
They're full-time employees. They may work in a different country, but they're actually employees.
Yeah, it happens. My head of my department's actually in San Diego, so my head's here, but everyone else is scattered throughout the U.S.
Gotcha. Great. All right. We got to wrap up here. I got one last question, and that question is: what are your 3 pillars of wealth creation?
Oh, do I sound like my dad? Jeez. You got to save, right? You got to save. You got to save some money. So I think the beginning is find a way to save some money. My second is look long term. So make decisions with long term in mind, not kind of going into these things this quick, immediate gratification. We live in that world of quick, immediate gratification. So just look long term horizon. And I would say third one relates to the first one. I really believe you have to do something or have some source of income to drive that. So whatever it is, there's stories about, I have plenty of stories of people did whatever they were doing just to have the income so they could start saving or get involved with real estate, but get something that brings in the income so you could do the other two things.
Yep. Yeah, the long-term one really speaks to me. I hear so many people that I think it's just our world that we're in right now. Like social media, you see somebody posting that they bought an apartment building, or somebody posting that they did this or that and the other, and everybody else wants it right now. They don't see the actual groundwork that came into it. They don't see the pain and suffering. They don't see any of that. They just go, I want it now. I need it now. I need that today. And they look so short-term, and then they get caught up and wonder what happened.
We're living in the days of crypto and NFTs. We'll see what happens in 3 to 5 years with all that stuff. It's a shiny lure. We're all grabbing it. We're all grabbing that Shiba at like 0.01 cents. And does it go to $1? And we're all millionaires. So it's tempting. It's really, I bought some. So at the end of the day, so it's very tempting. However, like it's always good if you have a little bit of money, but don't stick all your eggs in one basket.
That's true.
That's a big thing. If you have $10,000, don't go buy it all crypto. Just a little bit is okay.
Yep. Well, Craig, this has been fantastic. I actually, like I said, my audience knows syndications, real estate. We talk a lot about it. I interview a lot of people that are doing syndication, but I don't know if I've ever talked with somebody who's doing it like you're doing it. So it's really, really interesting. Probably could dig in even deeper, but how about you give our listeners, how can they get in touch with you? How can they learn more about your company and learn more about what you're doing?
Yeah, go to our website, DiversyFund.com. We're also on iOS and Android, so you can download our app as well. For myself, you go to my social channels, LinkedIn, Twitter, Instagram, and Facebook. I'm on there under Craig Cecilio, or CXC for my initials. Very easy to find me and find information about the company.
Awesome. Well, Craig, again, really appreciate you coming on the show, and it's been a pleasure talking to you. And thanks for giving us, our listeners, a ton of great information. It's been awesome.
Great. Thanks, Todd. Appreciate it.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.